We are officially live as of 10:42 Indian time and then 12:13 Toronto time.
Yes. Um,
Yeah, it,
this is great. I'm so glad we're doing this. We've probably had so many great conversations on product management. We have a mutual love for fintech and experience in that space. Yeah, I hope this is one of many conversations that we do, and I'm excited for this like, podcast series.
yes, I'm thrilled. And yeah, I'm super excited to see where this goes. Definitely looking forward to today's discussion and then many more after that. So today we talked about just diving into user segmentation in personal finance, and the whole idea is that you are trying to figure out like how we can better understand our customers, and we'll talk in terms of like personal finance and how defining segmentation based on customer behavior is more relevant as opposed to traditional means, which could be age, it could be income brackets, but trying to be more specific. So do you just want to give a quick overview of the four segments we came up with, and then we can dive into each one?
Yeah, absolutely. Focus, I think, is the most important part of any strategy, and I think we've both been in situations where we needed to segment our customer base and then figure out which segment to focus on. So, being such an important topic, user segmentation is, I think, in general, done on the basis of demographics, especially like as an early career PM, that would be the go-to, right? You would always think about demographics in terms of, okay, are we targeting students, young professionals, mid-career professionals, late stage, close to retirement, etc., right? There are significant problems with doing it this way. There is a better way to segment the market, but how people behave in a particular context is only very loosely correlated with their age or gender, right? So there's a better way to do segmentation. And I think today we want to talk about like how can we do it in the context of consumer fintech products. I think the idea here is not really revolutionary. We're not coming up with something which is unheard of, but I think it does have a lot of value and it's worth talking about. And we've come up with these four segments. We've given them some interesting names as well. And yeah, let's dive right in. Do you want to mention what we came up with?
Yeah, before we do that, I wanted to talk about the Prince Charles Ozzy Osbourne meme that he came across,
Right.
which was the initial inspiration, and then we can dive into the details of these segmentations.
Yeah, super popular meme, right? I think we've all seen it. A comparison of Prince Charles, I guess King Charles now, and Ozzy Osbourne. Demographically, they're very identical, which I didn't know about till I saw the meme, but very similar on paper if we were to just go by age. And they're probably both millionaires. Apparently, they've lived in a castle, etc. And that initially was the inspiration towards recording this conversation. Right?
Yeah, for sure. Yeah, I think it's. I have many stories. I know I shared one with you, and I can share about it again as we dive into the topic. So the four segmentations we came up with are newbie, saver, investor, and net worthy. So I'll define the first one like so newbie, as the name says, is we are looking at a customer who is new to personal banking. So this could be someone who is tech savvy, prefer digital first, and they are just getting their first banking account set up. And as a fintech, you want to make sure that you're creating a very seamless experience, a super friendly app, and also improve the overall experience. It's not just a digital experience, but think about the common problem or common pain points people have, and which often in the banking space is like hidden fees. So, as a fintech focusing on the newbie, you're looking at creating a transparent product as well as something that's seamless. Now, going back to what type of customers you're looking at is, in addition to someone who's new to personal banking, you could be also looking at helping underbanked individuals, because there are like individuals who just don't have access to banks for different reasons. It could be geographical location, it could be the type of their background, which is not served by traditional banks. It could also be like people who are migrating to new countries, because as you migrate to a new country, you have to set up your finances from scratch. You have to go about creating new bank accounts. I think that's a subsegment within the newbie user segment. So, regardless of which subsegment we are focusing on, whether it's like someone who's tech savvy, like say a Gen Z who prefers digital experience, if you're trying to help underbanked individuals or people who are new to other countries, you're really trying to focus on ease of access, seamless experience. And the two examples that I can think of are like you have Chime, which is a big neobank in the US, and then you also have Neo Financial in Canada. So they have like similar approach, similar strategies, and I would say like also trying to target similar customers, but geographically they just look at it in different countries.
Yeah, I guess the key here is that when we think about newbies, and just to take a step back, we've mentioned that we've outlined four segments, and these four segments, the basis of the segmentation is that people go through a financial journey. Initially, maybe they don't have access to, they're not included in banking, they're underbanked, and they want just basic financial products. And as they go through the financial journey, they go through these four stages that we're going to talk about. But this first stage, I think, is I think really, if we think about it deeply, it really drives home the point that it's not about demographics again. Like there are underbanked individuals across all age groups. There are people who are living paycheck to paycheck who do fall into this segment. Immigrants to new countries, irrespective of age, initially when they land in a new country, newcomers to Canada, obviously included in this, need just basic financial products. Like they need a bank account, they need a credit card, which is great with this segmentation, is they in general behave in very similar ways initially because there's just that need for basic financial inclusion.
Yeah, I think the inclusion is an important aspect within this newbie space. And then the journey point you made is very interesting, because I feel like if you follow like the traditional demographics, age for instance, I think that also assumes that an individual is static in their journey, because I feel when we came up with like newbie saver and the remaining two, we're talking about like literally like people evolving like in their financial journey, and as a result they're looking for different products. And by looking at it just from like a traditional way, you assume that people are just static in the journey, and you just give them like one product. So I think the journey aspect is very important, which is why we came up with four segments and not like one specific segment.
Yeah, yeah, and the journey is continuous, right? So the movement from being a newbie to then having everything that you need, like all the basic financial products that you need, is seamless. Yeah, obviously we can't draw a fixed line between the segments, but yeah, moving on to the second segment, when a person has been financially included, they have access to a bank account, they have credit cards, they can do e-transfers, etc. I think the individuals in this category, and we're calling these the savers because their mindset is the saving mindset. They think about their income and expenses, so incoming, outgoing, and they're focused on saving as much as they can. And so I think in terms of products like high interest savings accounts, GICs, some of them even think about very initial or high level financial goals. Like I want to save maybe for a retirement, or I should maybe start putting some money in maybe an RRSP, but they're really focused on getting the most out of their money in a very safe way. They don't want to take any risk. They want to stick to bank accounts or savings accounts. They do a lot of expense tracking. They might get into some form of personal finance management apps, but they're not risk takers, are they?
Yeah, I would say like a saver, if they're focusing just on getting savings account set up, then compared to traditional investments, it's fair to say relatively they are willing to take lower risk. It could be driven by their emotional state. It could be driven by like the actual goals they have. For instance, if someone is looking to buy a house in the next 1 or 2 years, opening a high interest savings account may be a better option than say investing into the market, because you just have more stability, or at least you have more you have a better perception of your money being stable in a specific place as opposed to being in the market, which could be more volatile. Yeah, so I think relatively speaking, it's fair to say they are like less risk averse. But if you look at the investor category, which is the third segment that we talked about, these folks are like earlier in their investment journey and they're willing to take a little bit more risk because of higher gains in the long term. And I think from the fintech space, like the idea is like these people are like earlier in their investment journey. And what apps like Robinhood and Wealthsimple did was they just try to make it more accessible of like how an individual can approach investments, how they can be active in the market as opposed to going through the traditional means of like high commission, high trade fees to be able to invest in the market. Yeah. So I would say like for the investor segment, the problem space was that it was just harder to access this investment space if you are an individual without having to pay high fees. So they've just understood like people are earlier in the investment journey, and then if you give them an easier way to be active in the market without charging them a whole lot of fees, and at the same time giving them some educational content, you can make that in a way it's like similar to like underbanked. I feel like investor is more or less just limited
Educated.
access, yeah, undereducated or limited access.
Yeah. Yeah, I think the key here is when moving from a saver persona to an investor persona, the investor segment has understood the concept of putting your money to work. They're no longer just concerned with saving as much as possible and getting the highest safe interest rate on their savings, but they're now trying to they have a variety of financial goals and they're evaluating risk versus return. They do want higher returns now. They do have, yes, they still have their saver mindset of income versus expense, but then whatever they're saving, they want to put that money to work, get higher returns. So they evaluate risk versus return. They, I think the key products here are ETFs, stocks. They may even get into crypto. But like you mentioned, I think these are explorers. They have educated themselves, but a company, a fintech company, which can educate them on complex financial instruments stands to gain a lot because they're willing to learn, they're willing to like broaden their horizons. And so a company, if they can teach them about, if you can simplify complex topics, let's say options, like call options, put options, if a company can make that easier for this segment, I think they'll be willing to give it a shot.
That's true. And I think the when you design products for each of these segments, you have to think about the customer mindset. And that's what you were touching upon. Because one thing I've seen is that with one of my savings account, like which is with Marcus from Goldman Sachs, like they do a good job of notifying me anytime there's a change in the interest rate. Because as Fed changes their interest, the bank is also changing their interest. So like they're notifying me that hey, your interest rate has increased or decreased, whatever the change is. And I personally find that to be very valuable because every time it goes up, it creates excitement. If it goes down, then it at least informs me and I evaluate, do I need to do something different with my money? Now, when it comes to the investor platform, maybe those notifications aren't as relevant because it might create anxiety with the market changing every day. You'll be getting a lot of notifications. But at the same time, I think having a dashboard that shows like how your investments are performing with some analytics, some prediction could be a valuable asset as well, which may not be as relevant for a savings account. So I think the idea is that if you understand your customer mindset, like what they're trying to achieve, what their goals are, you can cater the product to be designed for the respective category. I think one thought I had is I know when you and I have talked about, we say that people will go from a newbie to a saver and then to an investor, which was my journey as well. But as we're talking now, I'm wondering, is there a scenario where like someone who's new to personal banking, so like a newbie, actually becomes an investor first before becoming a saver?
I think so. And I think that's an interesting point. I think investors, one of the key things that you touched upon as well is like they value data. They want more information about things. They want more information about their finances. And I think and the reason that this is a really interesting point is again, it reinforces the idea that it's not about age. It's not that you will necessarily move from this persona of a newbie to a saver to an investor at a fixed age range. So I can think of an example, obviously extreme example. Warren Buffett started investing at such a young age. I'm pretty sure he skipped the saver segment entirely. So
Yeah.
I think he's an example of somebody who moved like directly to investor. And I'm sure, yeah, obviously people have been over time, they have seen individuals who have started investing at a young age. And so I'm pretty sure there are a number of kids out there who are learning about investment in school. I think, yeah, when you think about somebody like that, when you think about Warren Buffett or somebody super interested in learning about financial education, you can expect them to maybe even start their journey in as an investor. And I think we'll touch upon this a little bit later as well, where it's obviously not about age or any other demographic factors, but it is a lot about how much personal financial education you have. And talking about Warren Buffett, I think he moved from investor, probably he did really well. And in a few years, again, at a very young adult age, he moved into our last segment, which we're calling net worthy, which obviously we're not trying to say that this segment is like worthy. They're not like lifting Thor's hammer or anything, but they talk about this concept of net worth a lot and they talk about wealth. And so there are concepts here which to some of the earliest segments, especially the newbies and the savers, which seem very far-fetched, convoluted, and really far out. But this net worthy segment is really oftentimes speaking a different language. They're talking about portfolio diversification. They're they're talking about maybe financial advisors and the products also need to then align with what they're thinking about.
Yeah, I would say for net worthy, because they're focused on like asset management, their planning is very long term. So 5, 10 years, maybe even beyond that. Whereas the other three segments can be more transactional. It could be just looking at, say, for as a saver, as an investor, like a few months, your outlook is like a year, 2 years, 3 years. But net worthy is like very long term planning. So for that, one key aspect is like relationship and personalization. So financial advisor is something you mentioned. So I think that's what they're going to be valuing is, hey, can I build a long-term relationship with this company? Are there services that are tailored to like my needs as opposed to me trying to figure things on my own? Data becomes heavily important. Like you want to know like how your portfolio is performing, not just like one, but overall portfolio, and then what are different decisions or changes that you could make. And the more money you have, the more need I would imagine someone feels to like talk to a human and build a relationship as opposed to just like interacting with a digital product and doing things on your own. So I think the self-service aspect is valuable, but it needs to be paired with some personalization and some human touch.
Right. And to all other segments that have come before, that could that type of personalization and personal touch could appear costly. Like it would seem really far fetched. But to this segment, I think they weigh that ROI really well. Like they value somebody who can give them advice. It includes technology. I think robo advisors, like applications that help you manage your portfolio, ways to hedge your investments. Like you don't, they don't want, they have, I think, a good idea of their net worth. So they track the increase of net worth over time, and they don't value a lot of, they, they don't want a lot of volatility as well. They want a steady increase of their net worth aligned with their financial goals. So it's really interesting how it's different from an investor who's I think usually a little more exploratory to to a net worthy segment, which is yeah, valuing return, but also valuing hedging and low volatility and appreciates any help that they can get to be able to better manage their wealth at a portfolio level.
Yeah, 100%. Yeah. Is there anything else that comes to your mind before we like try to bring it all together and talk about like how fintechs can use the segmentation?
Yeah, I think talking about this final segment, I think a common like misconception about this way of segmentation could be, hey, is it just about the amount? Okay, we understand it's not about demographics, age, gender, any of that. Is it just about the amount of money that you have? And we touched upon this a little bit earlier, where yes, it is maybe correlated very loosely to the amount of wealth, but it's also correlated to the amount of financial knowledge that you have, the amount of personal education that you've given yourself or you've received. But that combination of wealth and the amount of education is really the key here. I think these are the two main factors which sort of define where you are, which segment you.
Yeah. And I think the idea of the segmentation is that as a company, as an organization, as a team, you can just focus on like how to create a product that meets the specific needs of the consumer, but know that no consumer is, you can't box a consumer in a specific segment. Like yes, you're building a product for a specific need, but know that the consumer at a given point of time might be in all four of these segments in certain shape or form, and of course they have other needs in their life as well. So I think the idea of segmentation is creating better products that are like addressing specific needs, but know that you can't put your consumers in a specific box and assume that that's all they know. Which I think is an important lesson, is that use segmentation to your advantage and know that a consumer is active in all four segments, and then even that would change over time. So it could be that they're moving from one segment to another. It could be like the proportion of their need in, say, as a saver versus as an investor changes over time. So I think that's important to know, which is what see a lot of companies. I think a lot of fintech companies, they start with one product, but they add products over time because they just realize the needs these consumers have, and then by expanding the product suite, it allows you to like, we would use the term like cross sell, giving more options to the consumers. I don't view that cross selling as a bad thing because I just feel like you're just giving them like more options. It's a suite of one stop shop, and based on the data you have, you can recommend different services to
Yeah,
the
and
consumers.
and that's segue into our subtopic of how fintechs can really leverage these segments. And yeah, I think yeah, it's the products. The key here, which you mentioned, is that one segment to another. Yes, we need to understand what are the needs of every, but also I think the ultimate aim of any consumer fintech product is to help people move from one segment to the next. right? It is to get people eventually to sort of the end state of being a net worthy individual. And so anything that they can do to fast track that journey is valuable. But of course, there's a pitfall to that as well. You cannot take a saver and start pitching them products or ideas which you would for a net worthy individual because those concepts are too far out. I think it's a delicate balance the customer dealing with. What segment do they fall into amongst these four? And then the products that you suggest, the hand holding that you do during onboarding, even the language that you use needs to align with what their current thought process is, which is based on the segment on. And then once they are using your financial products, you would nudge them towards try to educate them to help them move to the next segment.
Yeah, and I think one similar example can be if you have consumers with, say, in the saver segment, and as a company, I offer a high interest savings account. As part of my onboarding, I'm not going to distract these consumers with other ways they could invest their money as opposed to, say, a high interest savings account. But if they've been a consumer for a year, we have an idea of what their average balance looks like. We can recommend that, hey, because you have a high balance in our banks, it's advisable for you to take some of that money, maybe put that in the investor bucket, and that could be to offer your own product, or you could recommend any strategic partners that you have in that space. I think we're kind of talking about embed experience in the fintech space, which is growing as well. Maybe that's a topic for a future discussion. But where if you have customers for a long time and you have data on them, you can assess that data and like recommend other options for them.
Yeah. Yeah, I think it is the onus is on the fintech companies to understand this and help people on their journey. I often do see examples where this would be there are cases like you said, confusion during onboard. You're dealing with a newbie and onboarding involves like your announcements. Hey, you can now open FHSA account. It's there are concepts which are maybe a little far fetched. And I think there are often cases where less is more. If you focus solely on the products that they're interested in, I think it gets easier to acquire customers. In general, is a complex topic. So the more you simplify it, the better, obviously. But it's only once you acquire the customers and there's an amount of where you would want to nudge them towards products that the next segment would use. And you would assume that people their amount of financial education does improve over time. Yeah, and I think no comments you have on the way fintechs should be because I know one thing that we were really interested to talk about and we had quite a interesting discussion was on like the drawbacks or where does this not apply?
Yeah, I think there are different aspects of fintech where these customer segments may not apply as is. One example is small businesses. So like a newbie, like small business, like I think their journey would be very different because a small business is looking to figure out like how they can put their money in the banking space so that it can help them grow their business. So generally speaking, they may be looking for not just like transactions, say with business banking, they may be looking for expense management, which is a whole other category of fintech. So I think you have to then think about like the type of business you're serving because the needs of a small business are different than like needs of a medium business that has been around for a long time, which would be different than say a true startup is like still figuring out the product market fit. So yeah, these segmentations won't apply to small businesses. Similarly, if you look at the payments horizontal index space, these may not apply as well. I would say these are not segmentation, which like I don't think like there's any like one size fits all consumer segmentation that could be applied in any industry and be thought of is more specific to
Yeah,
consumer
it's very
finance.
focused on consumer finance, very relevant to banking, investments, personal, not relevant to businesses. On a side note, it would be very interesting to have a question on what type of personas or what type of segments we could do for businesses. But payments is an interest. There are certain consumer financial aspects which would be, I wouldn't say this is the main segmentation that payments companies can use. I don't think any company should be doing just one form of segmentation. This can be the main form of segmentation for a lot of consumer fintech companies, but you should always be thinking about different ways to segment. But going back to that payment space, I think there's some value in seeing your customers this way, even if you're a payments company. I think it goes back to the amount of financial education that someone has. So for some of the earlier personas, like the newbies and the savers, their understanding of, say, the costs of providing services might be primitive. They would have a very intuitive words, knowing a certain percentage that is being taken by the company to facilitate things. Where in the later segments, like investors in equity, just of the higher amount of personal financial knowledge, I think they're good with calculating whether this is worth it. They're good with doing understand whether the fees that they're paying for that facilitation is worth it. So when you think about creating these solutions, it's really useful to know into your revenue model would be, and you could have a very logical revenue model for invest worthy people, but it would have to be more, what would you say, eh, intuition, emotions for the earlier segment.
Um, yeah, I would say like for the old, like when you for the earlier segment, it would be based on like emotions is a good assumption. I think maybe that's a good starting point. And so you just have to sort of adapt and adjust based on what the response is from the end consumers. When you were talking about revenue model, like I just had this thought, like if there is a fintech company that has products in all four segments and they're looking to grow, I feel like in that case, the revenue model would determine which segment to. And then it's not just about the customer needs, it's also about the business needs, and you're trying to figure out like what's the best ROI for the company and then match that to what the customer is. So that was just a thought that came behind is like you can have these segmentation, build initial products, but once you have mature products and you're looking for like the growth opportunities, you may have to either double click on a specific segment or think about resegmenting things based on the suite of products that you have.
Yeah, that's a great point. Yeah, I think we've pretty much most of what we to talk about with topic, and we talked about like the four segments. I'm sure if we think deeper into it, there'll be more, and so maybe we could come back to this conversation in the future because it's so important to do the right kind of segmentation. And we also talked about how fintechs can leverage this segmentation and position their products, so the right type of products to build. One thing which comes to mind is if the end goal is to accelerate people across different segments and get them to becoming investors and then net worthy people, new technologies in the space, techno regulations like open banking, right? I think the whole concept of being able to aggregate your accounts into one application and provide a view of your net worth to everyone would really accelerate the transition.
100%. I feel it's going to benefit the consumers. I personally feel it's also going to benefit the financial as well. Yes, it'll definitely increase more competition, but I think it'll at least be a level playing field. I think addition because you're trying to provide more end customers, it can help. It can be a win by having the open platform, which is readily available in different shapes and forms. If you look at countries in Asia, if you look at the US, it's available, which these companies just make big advancements. I know in Canada that's been a hot topic of discussion. I've attended a few events myself. Open banking comes up, and people have questions, ideas, theories. But I would agree with you. It's an important aspect. It's an important foundation for the future of it.
Absolutely. All right. Any final thoughts on?
If I could summarize all of this in one word, like it just comes down like personalization. So what we're like think about like their mindset here relevant to the product. The product here is financial products, and by segmenting customers in the four ways we outlined, the newbie, the saver, the investor, the net worthy, you can create personalized experience, personalized products for them.
Yeah, absolutely. And yeah, it's not for the customers to know which segment it's for the
Yes,
companies to know and leverage. So yeah, it's not a badge that you have. It's a journey. All right.
100%.
This was a great chat. I love this and we'll be with more. But yeah, I guess bye until the next.
For sure. Yeah, this was
All
fun.
right.
Yeah, over and out.